Earnings season, it's just got a little bit more crazy. It's been such a busy week. This is the first time I think for a while that we've had an earnings season like this where we've seen stocks moving up and down a fair amount. And it's not often you get these kind of big market caps putting in these 10% plus moves, and it's nearly every single one that's moving a lot at the moment. It is kind of crazy to see this earnings season. Like I said, it's been a while since we've seen anything like this. I think the last kind of couple of earnings season, it's just been pretty chilled, 2-3% moves, but now we're getting a lot of companies reporting earnings. They're moving a huge amount, and I was supposed to be talking about the stocks that I bought last week, but I thought, you know what, after Snapchat, Pinterest and Amazon's earnings last night, we're going to have to talk about them, and maybe on Saturday I'll do a recap of the stocks that I bought last week, going through them anyway. So hope you enjoyed the video. If you do want to know when I'm buying and selling companies though in real time, make sure you join the Patreon, link is in the description. There's also 2 exclusive videos a week on there, and for you guys on Patreon, I'm going to try and get a 3rd exclusive video this week. I'm going to try and do a bit of a talk about Facebook, a little bit more detail into Facebook after their earnings, so just a shout out there. And there's also 600 members on the Discord to talk to about stocks as well. But we'll get stuck into the crazy earnings that carry on this week. I don't know about you guys, but I'm so far behind on conference calls from this week. It's been that crazy. So Facebook obviously came out and reported earnings. We talked about this yesterday. Went down 26%. This is crazy moves. To see some of these, I believe Facebook did touch a trillion dollar market cap, and it lost so much value yesterday. To see this move down that much is crazy. I think it was the biggest amount of money lost on a market cap ever in history, which is a massive drop off. 26% is a huge move, and basically that then caused the whole market yesterday to sell off, just like how Google basically saved the market a few days ago and everything was going up. Facebook then brought it back down. So there was a lot of pressure going into the likes of Amazon's earnings, which we'll talk about a little bit. I'm going to save Amazon to last actually, because I think that's the one to talk about the most. But the other two, which then moved down negatively because everyone looks at Facebook earnings and went, oh, that's going to mean that Snapchat and Pinterest have awful earnings, led to Snapchat. Snapchat went down 23% after Facebook's earnings, 23%. Then Snapchat brought their earnings out, and in pre-market it's up 50%. Now you do have to take that into context, saying, okay, they did lose 23%, so you take that off the jump that it did have. So realistically the jump is around about 20%. But still, he probably deserved it. The earnings were fantastic. And this is a big thing as well. Like a company like Snapchat, for example, until about October time, this was like $76. I don't know what that drop is there. I'm guessing that was probably something earnings related to see it drop that much. But this stock had been basically on 60%, 67% drop. And even if we take the drop off down here, since October time, when a lot of stocks have been downtrending, even then it's down 54%. And this is the big difference here. A lot of the big techs, for example, have been pretty steady over the last few months. A lot of these small market cap stocks, a lot of these growth stocks, and even I say small market cap, Snapchat is still a 39 billion, so that's still a pretty decent size actually. But the thing is a lot of these stocks are being just caught up on an ugly downtrend, and Snapchat was one of them. And just to top it off, then we had Facebook that came out, didn't report good earnings, and everyone was looking at Snapchat going, well, this is going to be awful. I'm going to sell out before they actually come out to report it. But the problem is something like Snapchat is so massively sold off, and there was just so much negativity going into the earnings, that then they reported earnings which were absolutely brilliant. The stock jumped 50%. And this is what it's like for a lot of these growth stocks and small market cap stocks at the moment. There's so much negativity out there that they just report earnings that are good, and it's a 50% jump. There's going to be so many in this category because we're going to start getting to a lot more of the smaller market cap stocks in the next kind of 2-3 weeks. And like I said, the Snapchat earnings were amazing. EPS, massive beat. Even the revenue was a fair decent beat, 42% year over year. First quarter positive net income as a public company. And as well as like Snapchat, for me, I thought this platform, out of all the platforms out there, all the social media plays, I thought this was going to be the one that would be one that dies off pretty early on. But fair play to the management team, they've really turned it around. And something very similar was like the Pinterest. Pinterest, same again. People looked at negativity out there. Basically, what's happened with Pinterest? Well, like a lot of these growth stocks, small market cap stocks, this is more of a small market cap stock, down at 15 billion. So much negativity since the start of the year. It's just been downtrending. Lost 66% of its value. Trading. This is 45p ratio for a company that's growing, double-digit growth is a pretty decent valuation. And there's just so much negativity being in this, massively sold off. And then to top it off yesterday, Facebook earnings, then take it 10% down, and everyone, I'm not having any risk going into these earnings. Report earnings, and it's up 14% in pre-market now, but originally this did cause a 30% jump in the stock price. And this is the thing, the Pinterest earnings weren't probably as good as Snapchat's. The EPS was a beat, the revenue was a beat, but it wasn't like a huge beat. And also the revenue as well was pretty much in line guided as well. So unlike Facebook, which came down and shrunk the guidance, Pinterest actually said, we're probably going to be in line with our guidance that we thought we would be, and that obviously helped the stock. So this was Pinterest not even coming out with decent earnings. Obviously they were good, they weren't bad, but they weren't like blowout earnings. But something like that, you wouldn't expect to see like a 30% jump, but that's just because there was just so much negativity going into this. Everyone priced it to, it's going to be awful, and then they actually report, and it's been sold off over the last few months. They actually report okay earnings, and then the stock jumped 30%. Obviously it's down 15% now, but that's what's happening at the moment. That's where we're at with a lot of these stocks at the moment. So yeah, that was interesting to see there. And Pinterest for a while, as I've said on the channel before, I previously talked about it. It is at cheap valuations. You look at this one here, and the benefit they've had from the CV situation. And if you go from like August time, or even let's just say January time, for example, this stock's up. Is flat basically. Is flat from 2 years ago. When you think about this company is now putting in still really good revenue growth and still very good, well, not even then because it won't even make a profit then, but now really making a lot of profit, and it's the same value. And this is what a lot of these stocks are at. And now to get to Amazon, so Amazon's earnings came out. Same again, people risk off, don't want to hold this stock before going into earnings. Sold off 7%. Earnings came out and we saw a jump of 17%. Same again, this has pulled back a little bit since the little bit of a jump, but still it's jumped up 10%. Now, the funny thing with Amazon is actually with their earnings, I actually thought these earnings were really poor. I would argue that these earnings were as bad as Facebook's. I thought they were really, really poor earnings. So the EPS wasn't comparable of what was expected. I think it was something to do with Rivian, but the revenue was a slight miss. But it was the guidance. The big thing is when you look at the guidance, what was it? And the guidance was way off what was expected. So if you look here, first quarter 2022 guidance, net sales are expected to be between 112 billion and 117 billion, or to grow between 3 to 8%. And this compared with the first quarter of 120 billion. Now, considering Amazon's supposed to grow 17% this year, and they came out with first quarter guidance of 3 to 8%, that's a bit off where they're expecting to grow out through the full year. Now, obviously that might recover, but it's still not putting in impressive growth rates. And the big thing with this is compare that to a Facebook. Facebook is went into earnings at 23 times earnings. PayPal, a little bit higher at 41 times earnings or whatever it was. Amazon went into these earnings, I think something like 53 times earnings or 44 times earnings. So this is got a bit of a bigger valuation on it. And like I said, their net sales are way off what was expected. And even operating income is expected to be between 3 billion to 6 billion. And this was compared with 8.9 billion. So once again, this is a massive decrease. We saw PayPal crash 25%, and I think their revenue was about in line, but their income was set to drop, I think, by 10%-ish. This is going to drop even more than 10%, and it's up. This was a bit of a weird one for me. I am very surprised to see Amazon up after their earnings, because I thought their earnings were just, I would say, worse than PayPal's, and I would say about in line with Facebook's. They weren't great earnings. I would have expected Amazon's to probably drop off these earnings. If you showed me them numbers, I would have said they probably have dropped 5-10% off them earnings. And then you compare what the reactions have been to PayPal and Facebook over their earnings, which were just as bad as Amazon's. Bit of a strange one, this one, I've got to say. I'm really surprised to see that jump in Amazon's stock price in pre-market. So we'll see if a few other people clock onto that, and it does sell off as the day goes on. But what that does mean is that potentially going into Friday, Amazon will be the stock that could potentially lift the market up, and we have a bit of a green day. I mean, it has been a bit of a choppy week. You know, at the start of the week, it looked like everything was going to be quite positive. As earnings got more and more on, the market has sold off, and we're pretty much nowhere really for the week right now. So this might be the make or break whether we do have another negative week, or if we do finish a little bit in the green this week. So it'll be important to see what happens, I guess, through today. But I've got to say that Snapchat, Pinterest earnings, I thought they were okay and deserved the jumps. But I've got to say I was totally surprised with Amazon's. I believe, in my opinion, Amazon's earnings were poor, and judging by the reaction of Facebook and PayPal's share price drops, and this is so much of a more expensive stock, and it is up. I am really surprised by that. So yeah, I think today will be very interesting to see how the market takes it. If the market does hold on to these gains, or it does sell off. But yeah, we'll see what happens there. So I thought I'd just talk about that one anyway, guys. I hope you enjoyed it. If you did, hit the like button. If you're new, subscribe, and I'll see you on the next video.